to we sit in the middle for the intermediation. Some people have said that banks or bankers are magicians. Why? Why is that so? Because we transform short-term money, i.e., when you deposit your money with a bank, it is really a short-term deposit because you can deposit your money on Monday and collect it on Tuesday. So it is a very short-term contract. But yet, using very many of those short-term deposits, we are able to provide long-term money, for example, 20-year mortgages or term loans for so very many years. So that's where the magic happens. But the beauty is that customer deposits with time, whether current accounts or savings account, name it, tend to be sticky. Once a customer establishes a relationship with their banker, they tend to keep quite a bit of money with them, and those tend to grow with time. Hence, we are able to do longer term lending. Banks are risk-taking units and therefore must be rewarded for the amount of risk we take, hence the margins. So a margin is the difference between what we pay to the depositor and what we collect from the borrower. Being creditworthy and bank lending in general is about trust, because banking institution is really built on nothing but trust. You can imagine people out there in the public taking their savings into an entity, a bank, which is a business like the businesses that you run, and trusting us with their money, trusting that when they need it, it will be available. So banking is nothing but a relationship of trust. And banks quite often fail or collapse when trust walks out of the window. So it's very, very important for us bankers to maintain the trust of our customers, but also that trust is built on the risk management practices that we do. Key among them is to make sure that we are only lending those people that we're sure will be able to pay back. I am sure for those that have been following the international news, we've had a couple of banks in the USA have collapsed, Silicon Valley Bank, Signature Bank, First Republic Bank. These banks were distressed largely because they suffered what we call margin compression. Remember, I told you that the margin is the difference between what a bank pays to its depositors and what it charges on borrowers. So in the USA, there was an interesting phenomenon. So for so many years, especially since the financial liquidity crunch, especially in the Western world in the late 2000s, to try and restimulate these economies, there was a lot of cheap money. And quite often central bank rates were in the 0 to 0.5%. So a lot of people enjoyed a lot of cheap money. So for example, Silicon Bank was doing the mortgages, 20-year mortgages at 1%. Of course, this is on the dollar. But then when inflation began to tick up in the Western Hemisphere, largely driven by post-COVID effects, logistical challenges, etc., that created lockups in the shipment of goods, followed by the war in Ukraine. All of that then began to put pressure on the economies, and they began to see inflation ticking up. Now, central banks world over manage inflation by raising central bank rates. So in the US, the rates began to go up quite some. And now, which meant that these banks, Silicon Valley, Signature Bank, name it, had mortgages, long-term mortgages, priced at 1%, but yet they were borrowing or getting money into the banks at 4 or 5%. So there was no way that relationship was to be sustainable. So yes, the mortgagees or the borrowers could pay, but the funding rate for the bank was not sustainable. On the next slide. So I'm giving you a little cheat note on how banks decide on whom to lend. Remember, we said for you to be considered creditworthy is that a bank or a lender will be comfortable lending money to you. So what is it that the bank considers before it makes a loan. The most important bit there is always about cash flows. And if you're running an entity, a business, etc., or an individual, it is important that you have positive cash flows. Now, positive cash flows and profitability are two different things. A business can have positive cash flows, but loss making, and vice versa. But while, yes, we look at the profitability of the entity, quite often we are looking at its cash flows because those determine how much the prospective borrower can afford, but also the revenue generational possibilities of this particular entity and how much in the future it can grow. So banks will almost always lend to a business with positive cash flows, even if it is loss making. And but the reverse is true. We will struggle to lend to a business with negative cash flows. And an example of a profitable business with negative cash flows, you will know, and for those that are members of Casita, you have had recently or in the past, when they've complained about they've done a lot of business in South Sudan, but the money is not there. Or some have done a lot of business with the government, but the government is running a high level of areas. So in their books of account, they show a profit, but they've not received any payment for their effort yet, creating a negative cash flow scenario, yet the business is profitable. So those things come into play when we considering making a loan to an entity or even an individual. The other big one is character and credibility. Your character precedes you. And for those of you in business, you definitely know that your character is your everything because once your character is impaired, then not even your friends will probably be willing to lend to you. How do we get to know about your character? One is we look at the credit reference bureau reports. If you've been borrowing from regulated entities, for example, that each time you borrow, all of the banks that subscribe to the credit reference reports will know about that. We also sometimes check with your colleagues, your friends, and human nature is such that we leak information like a basket full of water. If I want to know about you, I will speak to your friends. Like, let's say, tell me who your friends are, and I'll know who you are. So character is an important bit. The other is capital and capacity. So capital is you have skin in the game in the entity that you want to borrow for. And you find that this issue of skin in the game also quite often brings challenges of lending to startups. Have you put down sufficient capital in here? On the next slide, there are other considerations that we look at, collateral, and I should say upfront that banks or lenders are never interested in your collateral. Our business is not in taking people's securities. No, our business is in partnering with entities, providing the financing solutions that they need and growing them. Collateral is only but a fallback position. In case things go wrong and you can't pay, remember, we said we are not using our own money, we are using somebody else's money. And that somebody tomorrow might want their money back. So the collateral is a fallback position. Should things go wrong with the borrower, the collateral is then liquidated to ensure that the loan is paid and such that the depositors will find their money when they come back. So you find that I should also say that because banks struggle to sell collateral to foreclose, you've had the term market value versus for sale value. So market value is today you have your home, maybe if you send a valuer there, maybe say it's worth 250 million. But if we have to sell it on the quick, then maybe its value is about half of that, maybe 100, 120 million. That's what we call for sale value. because when the relationship sours between the lender and the borrower, and we must foreclose, i.e. sell the collateral, the sale must be quick because of the principle of time value in money. $1 today is worth more $1 tomorrow. So we don't want to take too long selling the collateral, because then the value of the loan continues to escalate. And quite often we caution business people, even the general public generally, because we've seen a couple of people trying to be dishonest with the banks or with their lenders. We've seen issues of fraudulent collaterals. We've seen issues of people trying to provide graveyards to borrow against those. So those are not things done in good faith. And but also it is important for those with spouses that quite often the collateral you provide, especially if it is a matrimonial home or things shared in the marriage, your spouse must consent to that before you can pledge it to the bank as collateral. The other bit is conditions, and we use this to really estimate how much you can afford. For example, for salary earners, some of the conditions we look at would be how long have you been at your current job, how long is your current length of contract, etc., to determine how much exposure we can take against you. And for businesses, how long have you been in that line of business? For example, I'm again going back to the challenge of startups. Quite often you don't start a business today and tomorrow you want to borrow against it. Very few serious lenders or bankers will want to do that exposure with you, because you are still in the learning phase of that business. The other is macroeconomic considerations. How will changes in the economy impact your business? I just gave the example of those banks in America. When interest rates went up, they went bust. So we try and put those things into the lending decision as well, as we decide on who to lend to and how much. So we call that a sensitivity analysis, i.e. We take the information you've given us, we sometimes discount it. So let's say you say, oh, I am in the poultry business, I have a productivity rate of say 80%. I harvest maybe 100 trays of eggs in a week, etc. When we get that information, we discount it. So you say 100, we say maybe 100 is a little too much, given what we see on your farm. Maybe it is 60, maybe it is 70, something like that. And then we try to do a sensitivity analysis. What if the price of eggs change in the market? Will you still be able to afford the loan? What if the price of feeds went up? You still be able to afford the loan? And then we make reasonable judgments based on what we've seen in the past. So we know, for example, the price of feed is seasonal, the seasonality. When the farmers have harvested maize, the prices tend to go down. And when we're getting to the end of the harvest season, the prices go up. And we factor all of those things in as we make a lending decision to you. On the next slide. So we've discussed what the bank will look at before they make a lending decision to you. So the reverse is true for you. To become creditworthy, you must work on those things, the things that we look out for. And we briefly on the next slide, I tell you a bit about the things you ought to do for you to be bankable, for the bank to take some risk with you. One is we must learn to save, and quite often, and I'm sure you've heard the saying that many places in sub-Saharan Africa, the savings culture is still quite low. But we need to improve that. Money is not simply for eating. When we make some money, when you have an income, make sure you save some, invest some. Of course, there will be the spending that you do. But we discourage people from saving in their wallets, their homes, etc., because then there will not be a record of that money. And like I said, when we're making decisions, we want to analyze some numbers with you. And so it is important that you keep some records and build a track record. If you're running a business, keep some books of account. Or you could even have a simple cash flow where you have cash in and cash out. That's enough to show us the goings on in your business. Or even importantly, transact in the bank. When you have your sales for the day, bank them. When you have to pay anybody, pay them through the bank. So that way you build a record for which we can then help to analyze your cash flows. We can help to analyze the health of your business, the size of your business. And that's why you find that quite often when you come to borrow from the bank, they might say, can we see a bank statement? What they are looking for is, can we see a record of your businesses, of the claims you make? So when you say, I sell 100 trays of eggs a week, can you show us where that money is? So if you're not banking it, or if you're not keeping records, then it becomes a challenge to both you and the lender. And then the discount factors will be higher. So when you say 100 trays, we will say, since you we didn't see any record, maybe it is 30. Okay. The other on becoming creditworthy is to formalize your business, register or incorporate. But the advice or the caution here is that you must only incorporate if it makes tax sense. So we've found that quite often some people rush to incorporate and then they forget to look out for the tax benefits of their decision. Because at the end of the day, tax is an expense on your business and impairs or reduces the cash flows that are available for you to use. On the next slide, run a viable or sustainable venture. So what we caution business people is to bite off what you can chew and also manage your growth well. So sometimes you find that your business is growing too fast, maybe beyond your capabilities or beyond what you are able to do. And we use the analogy of flying too close to the sun. You soar so high that you get too close to the sun and burns you back to the ground. So you need to manage your business growth in such a way that you can continue to manage the risks as they come along. But also be disciplined in how you run your business. So, for example, we've seen that sometimes business people will borrow from the bank maybe 200 million for cash injection into their business, working capital injection. And then as they are going home, the neighbor says, oh, I'm selling my land. And then they divert the money into the land purchase, which then impairs the business for which they had borrowed for. Sometimes it is important to be disciplined, irrespective of how lucrative or sweet the next plot of land might look or might be, but you inject the money in the business, grow the business, then the profits out of the business, you will always buy whatever land, wherever it will be. Stay healthy, it is important, especially for sole proprietorships, to lead a healthy life. Because while this is unsaid, when you come to the bank to the borrow, of course, the relationship manager will also try and see this guy be around tomorrow. They are not soothsayers, so they won't know. But we also insure our borrowers for life insurance, and it comes with a premium, which is usually paid by the borrower. So, and for the insurance company, every so often they will sample a couple of customers, and if you are not very healthy, they will step up your insurance premium. So, and usually for this, I'm speaking about lifestyle ailments. So, stay, exercise, stay healthy, etc. And then there's the bit of key man risk when you and you alone are the business. So, God forbid you get hit by the bus, you die with the business. So there's all of that to consider. But the most important bit about remaining creditworthy is to never default on your obligations. Thou shalt not default on your loans. Very, very important, because when you default in a regulated institution like EFC, all of the banks in the market, all 33 of them, will know because we report this information at the Credit Reference Bureau. So my advice is, please don't run. And to use the analogy, don't run when in distress. Rather, go speak to your banker about the challenges you're facing. And then together with your banker, you'll come together with, you'll agree on solutions. Loans world over, including Uganda, can be rescheduled, can be reorganized. You will recall that during the COVID pandemic 2020 through 2021, we offered a lot of repayment holidays, okay? Because we realized that the country, the businesses, etc., people were under distress. So paying loans was last of the things they considered. So, but also in speaking to your bank about restructuring your loan, always try and match your expected cash flows to due dates, okay? Never take a loan where you're required to pay monthly, but your cash flows are quarterly. A good example is schools, okay? The students or the guardians or the parents are paying termly or every 3 months. So their cash flows are spiking in 3 months' time. And it would be unwise for those to take a loan where they're paying a monthly. So those considerations, even you, the borrower, needs to go through them. Because bankers hate surprises. When you come to borrow, you tell us a very good story, and we buy into the story and finance the story, and then a month or two down the road, things begin to happen differently. Okay, bankers hate surprises, and then there's a cost to defaulting, to not paying in time. Okay, if you've agreed with your banker that you will pay your loan on the 20th day of every month, please make sure you pay the 20th day of every month. Because even a few days delay, let's say you, instead of paying on the 20th, you pay on the 30th, sometimes attracts penal interest penalties. But also that information is recorded at the Credit Reference Bureau, that the next time you are borrowing, even from elsewhere, that information is factored in. You say, this guy never pays on time. We better charge them a little higher for the risk we are taking. So generally, the C's we talked about earlier, the cash flows, the capital, the capability, the conditions, always work at improving those C's for you to remain creditworthy. On the next slide. So on the next slide, as I conclude, your reputation, like I said earlier, is your everything. A reputation once broken may possibly be repaired, but the world will always keep their eyes on the spot where the crack was, where the break was, okay? So lending is strictly about your relationship, your reputation with the lender, and your ability to service your obligation. That is how you become and remain creditworthy. I thank you for this morning's discussion.
All right, thank you, Shem, very much for that presentation. I see a comment from Julius, from Hangi Julius, and good information. Thank you, Shem. Are there any questions for Shem on creditworthiness or comments? Interestingly, last week we had a presentation, the Business Recovery series, on how to handle debt. And one of the things that was mentioned was reach out to the banks and give information and keep them updated and ask to reschedule and do these things. It seems a lot of people actually do run away. I just saying, Morife, don't run. The bank always, one or the other, gets you. You mentioned the Credit Reference Bureau. There's something that was mentioned a few years ago about mobile money transactions being taken into consideration. Is this active yet?
Thank you. It is not active yet, but there's a bill in the offing, the Credit Reference Bureau, and the Credit Reference Bureau's net is going to get wider. So it is going to allow a lot of entities to collect and provide information to the Credit Reference Bureaus, from utilities, national water, MEME, etc. So when you default on your national water bill, it will be recorded at the Credit Reference Bureau. A lot of business entities are going to be required to provide information and to the Credit Reference Bureau. Take, for example, your local hardware store. Quite often, people are running accounts with their local hardware providers. So the date you have there, that will soon be reported at the Credit Reference Bureau. It will widen to supermarkets, to schools. So all of the entities that provide quasi-credit, that lend, because when you go to your hardware store, store or shop and take 10 bags of cement on credit, in a way, that is a loan. And if you default in your hardware obligation, the world needs to know that you are of a certain character. Why? So the bill is in the offing. Maybe by end of this year, it should become law. And then the information asymmetry will be reduced, and your lenders will get to know a lot more about you.
Okay. That's interesting. There are a few questions in chat. From Bossa. Bossa Chris, as a farmer, how does the organization help farmers in terms of credit facilities?
I didn't get the question. Come again.
As a farmer, how does the organization help farmers in terms of credit facilities?
So at EFC, we're working on partnering with some organizations that are providing specific technical assistance to farmers. Today, we do not do primary agriculture except for poultry, but we basically do not yet have the capacity to expose ourselves to a guy who goes to the garden with a hoe. That's what we call the primary agricultures. But everything after the farm, i.e. farm value addition, packaging, marketing, name it, processing, those we do. But probably by the end of this year, in partnership with a Belgian organization called ADA, we're working on something today. On top of providing financing solutions to farmers, we'll also provide technical assistance, knowledge sharing with farmers. Our customers will be able to download apps that tell them a lot more about their farming conditions. And I think there will also come things like soil analysis, weather predictions, etc., to improve farmer productivity. But that is coming much later in there. For now, all we provide for primary agriculturists is savings accounts and giving them health returns. But those that are in agro processing, agro value addition, those we do both our savings and loan products.
Okay, thank you. I hope that answers Bossa's question. Harriet says, your banks, thank you so much for your presentation. Every bank seems to be too restricted to Kampala. Which up-country locations do you have where clientele can locate you? I think this is also similar to Andrew Seranga's question. Thank you, Sam, for the cool presentation. My question is, how best can creditworthiness for institutions dealing with locals and villagers in the case of SACCO? Okay, that's a bit unclear, but I think he's asking, how do locals and villagers in SACCOs build up their creditworthiness?
Thank you very much. So yes, like I said in my opening remarks, we are still largely a Kampala bank, but with digitization and with agent banking, which we'll be signing up this July, we will be able to extend our services across the country without necessarily having physical presence. But as we grow, like I mentioned, that our aspiration is to become Uganda's leading SME bank. We will get across the country in a very short time once we are done with what we are doing on our licensing side to become a commercial bank. On the question of creditworthiness and what people of country dealing with SACCOs, what they can do. You know, SACCOs are a little unique entities because SACCOs are member-based organizations. and they only do business with their members. And indeed, members define the rules of how that business will be conducted. And so usually what I've seen in many circles is they'll lend you either a multiple of your savings or a fraction of your savings. Quite often they'll say, save £1,000,000 and we'll lend you 500,000, or save 100,000 and we can lend you up to 300,000. Circle loans tend to also be quite short term because of the amounts involved. And so possibly the idea is that as people get exposed to financial services, formal financial services in a circle, small loans, as they graduate to larger amounts, then they begin to access the larger supervised institutions like ourselves.
Yeah, okay. Eva, I'm seeing your hand is up. You can please unmute and go ahead. Eva Mbogo, yeah.
Good morning. Thank you, Shem, for the informative presentation. I wanted to know more information about when he said that when you borrow money and somehow default, then all the financial institutions get to know about this. And therefore, the next time you're borrowing, the risk is high. Now, my question is, if I borrowed today, or let me say last year, and then somehow my cash flows were not so good and I wasn't really paying on time, but I eventually complete that payment. And then now this year I want to borrow and I have planned better and I'm actually paying on time. Does that improve my credibility that the next time I'm borrowing, the other picture of 2022 does not get reflected as my assessment is going on? Thank you.
Thank you very much. So yes, in banking and in the Credit Reference Bureau, we have what we call worst days. Worst days means on your previous obligations, what was the longest amount of time you took before you paid a loan when it was due? Let's say your loan was due on the 30th of May, but you paid it on the 29th of June. So worst days for that loan was 30 days. Now, that record exists on your Credit Reference Bureau records for at least 5 years. And so you find, so in one of the things we are looking at is worst days, because like I said, banks prefer that you pay your obligations on time. So when you take too long to pay and you find worst days for some people go into hundreds of days, you're creating financial distress for both yourself and the bank, because then the bank must make a provision on that loan, but also must make a provision on how to reimburse the saver who provided the funds that the bank lent you. But yes, if on your subsequent installments or your subsequent loans, you regularize and pay on time, that definitely improves your credit score and reduces the likelihood of you getting penalized with a higher interest rate should you borrow again. But again, the idea is when you realize that you're going to face distress or that your cash flows will not come on time, always important to speak to your bank ahead of the event. Because like I mentioned, banks hate surprises. Speak to them ahead of the event that, I don't know, I was expecting license X, but it has been delayed. So it is impacting cash flows up to this amount. And then you sit with your banker to reorganize that facility. Once it is reorganized, the worst days will not be reported, but there will be a note that the facility will be reorganized, but then performing. The challenge with letting your facility become non-performing is yes, because every month, at month end, one of the things we do first is to upload your information, your credit performance information with the Credit Reference Bureau. So as soon as it is uploaded, it is available to all of the bankers. They will know that Martha or Eva didn't pay her loan on time. So very, very important to keep it on time.
Okay. That's actually very informative. There's a question from John Wabirukamu, who was mentioning many key lenders for many Ugandans are telcos. These are not captured in the Credit Reference Bureau, but I think you answered this, said it's going to be reflected soon with a new CRB, with a new bill. There is appreciation from Harriet and Eunice. A question from Geoffrey. Most businesses were affected by the COVID-19 pandemic, and since then the business environment has been hostile. Cost of doing his business is high. How do you assess these factors while lending? Will this not increase credit rates and stifle the business more?
Yes, a very beautiful question indeed. Remember, banks are also businesses. We operate in the same economic environment as our borrowers or as our customers, and we take into account all of these changes in the economy. Yes, you will recall that when the pandemic and the attendant reliefs were first announced in March 2020, one of the sectors that was impacted most and for which the state rushed to ensure that reliefs were available was the banking sector. You will recall that for long periods in 2020, all banks or supervised financial institutions provided some form of credit relief to their customers. For EFC specifically, I think at the start we had an up to 6-month repayment holiday. But I should say though that even as customers apply to enjoy some of those reliefs, they must always be considerate about the cost that is coming with them. Because a repayment holiday comes in two forms. There's a repayment holiday, but without suspending interest. And there's a repayment holiday with interest frozen. Now, a repayment holiday where interest is still running, in the end becomes quite expensive for the borrower, because remember, the loan continues to accumulate interest and you're not making a payment on it. So in a way, you also get tied up into the challenge of paying interest on interest. That too is money due. So always important as you negotiate with or discuss with your banker to iron out these things and find out what accommodations the bank can provide. But remember, the bank is also at pain to not offer too much beyond what it can afford. Like I mentioned, the bank is also a business, like the business you're running. But more importantly, banks are highly leveraged institutions. We do not use our own money. Only 15% of the money in the bank is ours. Everything else is depositors' money. So we have a fiduciary duty to the depositor, that when John deposits money on Monday in our bank, should they come on Wednesday, that money must be available. No questions asked, no dilly-dallying, no delays. So because of that, banks must be run prudently. So you find that we look at risk with a very keen eye, and quite often banks have been accused of being unreasonable, but the real rationale for that is that we are not using our own money. I see a question, what is EFC in full? EFC is Entrepreneurs Financial Center, but our name changed from Entrepreneurs Financial Center. The name we are pushing is EFC. EFC is EFC.
Okay.
Yes.
Question from Josephine. If I have a land title, how can I access money?
So, like I mentioned, we are not simply a collateral lender. You don't bring your land title and say, hey, here's my land title. It was worth 100 million. Lend me 100 million. No. We are about entrepreneurship. So quite often we are lending to people with businesses, with ventures. So the assessment will be done on the business you do. collateral is only but a fallback. Okay. So we'll assess the cash flows of your business. We will assess your character, whether you paid your obligations well in the past. We will assess the nature of the business you do. We will assess the market conditions in the business you do. If the rains didn't come, what does it mean for your business? Things like that. And then with all of that information, including the records that you keep, ascertain an amount that you can afford, and then back it up with the security that you provide.
Okay. Is EFC focused on entrepreneurs?
Yes, EFC on the lending side, we are all about entrepreneurs. So we don't do what is commonly called consumer lending. For example, loans to salary earners, etc. Those we don't do. We focus exclusively on entrepreneurs, and we aspire to be Uganda's largest SME bank. But on the deposit side, we basically deal with everybody, anybody for their deposits.
All right, thank you. There's a comment from Nila Manzi, who says, thank you for the presentation. I've lived and run in all I can do through bank loans. I thank God I never default. My advice is to use the loan only for what you borrowed it for. This is very true. A lot of people end up in problems because they get the loan to buy a capital investment, maybe a machine, then they go and put it in a wedding. There's a question from Rosette asking about how about agricultural credit facility administered by BOU. Are you active there?
Yes, we are a participating institution in the agricultural credit facility. So usually what happens is that a customer who qualifies for agricultural credit facility will do the assessment and then pass on the file to BOU for further assessment. The approval is done by Bank of Uganda, but we are the disbursing institution, and then we share the risk 50-50 with the Bank of Uganda. So yes, EFC is a participating institution for the agricultural credit facility.
Okay, I see Martha has put their contacts for EFC. You can contact her in case somebody wants more information. A question here from Julius: do you have unsecured loans for businesses?
Depending on the nature of the business and the strength of the cash flows, we have in the past considered unsecured lending for businesses. So on a case-by-case basis, we do, but it's on the strength of the analysis.
Okay. Comment here from Bosa. Banks and other credit facility providers tend to utilize customers' ignorance during acquiring loans. How different do you handle uninformed clients regarding loans that they take?
So two things that we do, and these things are also regulated. So for starters, there is the requirement to translate, say for customers who might not use the language of the bank, which is usually English. There's the requirement that your loan contract or your transactions with the bank are translated for you in a language that you understand. Sometimes it could be a bank translator, or if we don't have the service, we'll send you to a lawyer that we have. So we have a slate of lawyers, usually 4 that we nominate, and we say, please go over there and have a discussion, or use your own lawyer if you so prefer. The other is what we call the key fact document. Again, this is a regulated document and required for every product that we offer to each customer. And it is part of the documents that are handed over to you when you transact, when you start a relationship with the bank. So the key fact document will explain the type of product you've taken, the charges and the pricing, if any, all of the conditions, all of those are listed for you transparently. And one key feature about the key fact document, if it is a loan, the interest rate is more prominent. It is bold and it is in a bigger font. And then the last one is that for all credit contracts, again, there's the requirement for you to speak to a lawyer if you choose before you take the loan. And then we have lastly what we call a cooling off period. So within 10 days, you can borrow a loan, but within 10 days, you can decide, no, I don't need it, or I don't like the conditions, and you can pay everything back within 10 days, and you will not suffer penalties. So it's called a cooling off period.
That's very interesting. Never heard of a cooling off period before. Would somebody pay back also the interest or just the principal at that moment?
You'll pay the interest maybe and a few inconvenience charges, because there will be some effort put into dispersing that money. But if it is interest, you will probably only pay it for those 10 days.
Okay. That's quite interesting. All right. Yeah, it's actually mentioned last week also, when in last week's recovery series, that a lot of people do not actually read the loan agreements, and they're advised to actually get a lawyer before you sign to understand, so that you know exactly what you're getting into.
And where you don't have your own lawyer, the bank will get you a lawyer.
Okay. No cost?
It will be part of the cost of the loan. It will be embedded.
Okay. All right. There's a question here from Andrew. I'm in retail and wholesale business. By my look of performance this year, my growth curve is up and down, never like this for the past 10 years. Not even in COVID times. Cannot find explanations yet. Under these circumstances, do you advise to borrow or halt borrowings from commercial banks?
When you're unsure about your cash flows, or if there's a lot of what we call volatility up and down, it is advisable that you first concentrate on stabilizing the business before you introduce another level of complexity. Because when you borrow, you have introduced more complexity, business, more balls to manage. And now you must manage a borrowing relationship with the bank. You must pay keener attention to the cash flows. And yes, on your day-to-day running of the business, you are taking care of a lot of other things as well, like market dynamics, sales, etc. So the advice would be you concentrate on stabilizing that business, understand what needs to be fixed and fix it. Maybe things you need to discover some more about the market, go and discover those before you come to the bank. Because the unfortunate bit would be that if you borrowed short of doing that, creating the stability that is required in the business, and the business goes bust, usually it's not just the business that goes bust. If it is a small business, the borrower and the business are inextricably linked. You are one and the same in the eyes of the bank, okay? And so it will create a lot of distress for you, for your record, probably even for your family. The lender will be running after you to foreclose. And maybe the other thing I should say, that even when you provide collateral, and should the bank sell your collateral and it's not enough to pay the obligation, the liability never goes away. They will still come after you to pay, even if they've sold your collateral. So important that you create some business stability before you introduce additional complexity.
All right, thank you. That actually makes a lot of sense. Always keep advising people, please keep your records, but also in addition to those, analyze your records. It's not just enough to record, but also what are your records telling you? How is your business doing? What is going well? What is going poorly? What should you concentrate on, especially in terms of vulnerability? During the COVID pandemic, Enterprise Uganda provided a lot of business support to entrepreneurs, and it was free over phone. And a lot of businesses that were struggling, we just gave them simple hacks and they were able to turn their businesses around. So this is quite key for everybody to do. Always analyze your trends and see how to work out and have informed decisions. There are two more questions. What are your lending rates, and do you have asset financing for SMEs?
Yes, we are all about SMEs, and like I said, our aspiration is to become Uganda's largest SME bank, and we are making great strides towards that goal. Our lending rates range from 21.3% all the way to 36%, depending on the nature of the business, depending on the risk we see, depending on the strength of the collateral. But if it is agricultural credit facility, that is priced at 12%.
Asset financing?
Yes, we do asset finance. We are all about SMEs.
All right. Thank you very much for this session. Stephen is asking how can I access a recording for this webinar? We shall send all the recordings available. We usually send them via email, but if you go to our YouTube page, Enterprise Uganda, you'll see all the sessions for all these available. Thank you very much. Also, Enterprise Uganda always takes on, we always get approached by people that have opportunities for entrepreneurs. So we shall be sending out a survey to do opportunity matchmaking to see which opportunity meets up to you. And you can also tell us what you're looking for. So that every time we have something, we'll let you know. Actually, currently we have a training that is going to start for businesses that are just new. Oh, okay. People are now asking questions as we wind up. We're going to take 2 more questions and then we wind up this session. So what if I borrowed money and you finish works of business before time you agreed? Can you take back all the money or you have to wait until the time to finish is ready?
Yes, we call that early repayment. Yes, you can always repay off your loan anytime. You don't have to, if you feel like you don't need it anymore, you can always pay it back, the full amount.
Okay. All right, that is good. A lot of banks don't like early repayments. There's a question from Rosette. Rosette, I see your hand is up. Please go ahead.
Thank you very much. I think the questions really indicate how people are interested in this topic. And we thank you, the presenter and Enterprise Uganda. I also would like just to inform the people, the listeners, about the Small Business Recovery Fund. I don't know whether DFCU is participating actively, but the Small Business Recovery Fund was put up by the government of Uganda to help out those businesses that suffered during COVID-19. And the interest rate maximum is 12% per annum. And this one is basically for small businesses that were affected by COVID-19, whose cash flows were affected. I don't know whether DFCU is participating. Thank you.
Yes, EFC is the participating institution in the Small Business Recovery Fund. And indeed, we've spoken to a couple of our customers who were distressed under COVID to access this facility. It comes with a few conditions, but once the customers meet the conditions, then they can always access the funds, yes.
Okay. It is EFC people that are hosting. Yeah. Thank you very much, Shem. I don't see any other questions. People are just, someone is asking for telephone contacts. How can people reach you?
They have been shared somewhere in the chat.
Yeah. Martha, maybe you can share the telephone contacts again for EFC. Thank you very much. Shall be seeing you again next Thursday. We shall also be sending out a form, a survey. Tell us what you need, what opportunities you're looking at, such that in case that we come up with those, we shall let you know. All right. Thank you very much. Somebody's asking for WhatsApp for Enterprise Uganda. Let me just post it also in chat. Thank you very much, Shem. Maybe one last word from you that people should always think about and keep in mind.
Thank you very much. Like I mentioned, EFC is all about SMEs. We pray and prefer that we all run our businesses well and that the businesses grow And because it is actually SMEs that are the growth engines of any economy, be it Uganda, be it United States of America, for example. So we wish you well and thank you for being with us this morning.
All right. Thank you very much, everybody. See you next Thursday.
Thank you.